Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Wednesday, Hump Day. It's also May Day, so May 1st here, and hope you guys have a great morning here. We got a few economic news to go over today. We'll just jump right into it. We'll start with the ADP employment numbers. This will be the first of the three. We'll have the weekly jobless claims tomorrow, and then the Bureau of Labor Statistics on Friday. So, of course, that will be the big one of this week. ADP, previous reporting in March was 151,000 new jobs created in the private sector, and April came in pretty high here at 275,000. Now we got a couple of manufacturing data here. We'll start with the market manufacturing PMI for the month of April. So in March it was at 52.4, and it increased in April at 52.6. So anything on these two indexes indicate anything in the 50 and above is optimism or expansion, or anything below that becomes like a pullback, extraction, or pessimism. Then we got the ISM manufacturing. The second one is ISM manufacturing index for the month of April. So March it was at 55.3%. Forecast was calling for a drop down to 54.7, and it dropped even further down to 52.8. So a little bit of mixed reading right there with the mark between the market and ISM here. ISM had a pretty good drop, but whereas market manufacturing shows a slight increase. And then we got construction spending here for the month of March. We had an increase of 0.7% in construction spending in February. However, in March, it called for a drop of 0.4%, and it dropped a little bit further down to 0.9%. So it dropped total 0.9% in March. Later today, we'll have the Federal wrap up its two-day FOMC meeting. They're expected not to have any rate hikes or any rate decisions for the most part. It should be unchanged. But the investors will be looking at any clues as to their thoughts on the economy. We had a nice GDP number come in. We had some decent. I think the last one we had was a pretty good jobs number. So it'll be interesting to see what they say going forward, where their thoughts are, and if there might be a rate hike or any rate hike or cuts later in this year or next year. They'll be looking at the dot plot. They'll be looking, and again, for any clues as to the Fed's thinking. So let's jump over here to the headline news. Stock market's up a little modestly this morning. It's taken a lot of its cues more from the corporate earnings. Apple released theirs, beat their forecast. Still not great, but it beat their forecast, what they were indicating there. Bond market. So bond market's up 5 basis points right now, so it's kind of helping things out. But it's not quite enough to give us a big push into any change in the pricing for interest rates. So mortgage rates remain unchanged. And then here's yields. Yields have fallen a little bit more, so this is helping us out. It's dropped down. We were at like 2.52, 2.53 lately. Now we're down to about 2.48 here when you round up here to 2.48. So that's good news for mortgage-backed securities here and giving us a little bit of improvement, but not quite yet enough. The movement in the mortgage-backed securities isn't quite enough to give us any better pricing today. All right, you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.